Most likely, you've been considering where to invest your funds to generate income and become wealthy in 2023. Well, there are numerous ways to invest your money in different enterprises, and it largely depends on your areas of passion and the knowledge you have regarding wealth creation. But where exactly should you invest, and what sectors are actually providing opportunities for wealth? Well, without further ado, let's get started. Before we begin, however, please note that this is not financial advice and this is just purely for educational purposes. Number 1. Stocks. Trading shares of publicly traded corporations on the stock market enables investors to make a lot of money. If investors in these shares make wise buy, sell, or trade decisions, they could achieve significant returns. However, the stock market has endured a crazy year due to the uncertainty going on in the world, high inflation rates, and rate hikes. Everyone has had a challenging year, mostly due to the decline in stock prices and the difficulty of paying bills due to inflation. If you were to ask the regular person nowadays, they would likely tell you that stocks lose value more often than they gain. Why do we think in such a way though? And this isn't just a problem for us, even stock market specialists are struggling now. Nonetheless though, there are definitely still some profitable stocks to purchase. One of the companies you can invest in is NIO. Even though the car sector is facing severe challenges like historically high inflation and shortages of semiconductor chips, NIO is very well positioned to increase their production and its portion of China's developing electric vehicle market. Also, take a look at BlackRock, the company that controls almost 10% of the world's assets. Meta, the social media company giant. These are companies that can easily double your money in 2023. Number 2. Cryptocurrency. The last few weeks haven't been very fruitful for the cryptocurrency market, but nonetheless, cryptocurrency's slow but steady recovery offers some hope. By 2023, investing in crypto could even make you quite wealthy. However, as with any investment, the risk of investing in cryptocurrency should be weighed against the potential rewards. However, investing in crypto is an excellent idea if you want direct exposure to the excelling demand for digital currency. Investing in crypto now gives people access to a class of assets that may one day completely alter the structure of the financial markets. One of the hot cryptocurrencies that will certainly take off in 2023 is the Solana SOL token. It became very well known due to a market boom in 2021, during which the value of this digital asset surged by over 10,000%. At the time of recording, SOL is currently trading at $31.56, and if it rises back to its all-time high, that will be a significant 700% increase. In a nutshell, that's 7 times capital gain on SOL. There are also other altcoins like Sand, which is in the metaverse, Uniswap in DeFi, Helium, Polygon, and some new coins like Optimism and Aptos, which have the potential to explode in 2023. Number 3. NFTs. Now let's define the NFT sector. Nowadays, whether someone creates content for YouTube, social media, or other applications, they don't technically have ownership rights to it. The user agreement between the businesses and platform owners specifies that users can temporarily use their resources and upload content. So in actuality, the content isn't owned by the original author. This is a major problem because the platform's creators exploit the material for commercial gain and can ban creators who break platform rules. Since the idea of non-fungible tokens enable acquiring ownership rights over certain content, NFTs are the solution to this problem. At the minute, NFT interest is currently increasing due to advancements in the metaverse. Investors and regular people see the technology as a platform for selling photos for thousands to even millions of dollars. 2022 to 2023 will likely see a lot of changes because NFTs are essential for GameFi and metaverses. According to the Jefferies International Investment Bank, the NFT market could well have a capitalization of $80 billion by 2025. Moreover, the growth tendency will persist beyond that. But that being said, you still need to be careful and actually buy an NFT that has value, not just any ordinary NFT. Number 4. Housing and real estate. Consumer confidence in purchasing a home fell to an all-time low in May this year. However, if you have the money, this would be an excellent time to consider buying a house. That may come as a surprise to you considering the average rate for a 30-year fixed mortgage was about 3% in January 2022, but now it's roughly 7.08%. Home prices have increased dramatically since 2020 and mortgage rates have been continuously climbing since this year. Generally, purchasing an asset when the price drops is a very good idea. If you buy a property today when mortgage rates are high and housing prices are decreasing, your house's worth will likely increase when mortgage rates stabilize or even decline, as opposed to if prices were rising quickly and mortgage rates were rising. So that being said, purchasing a house in 2023 might be a very good idea. Number 5. Rolex watches. The price of Rolex watches rises over time as the gap between supply and demand widens. They become an asset rather than just an ordinary wristwatch, and as a result, they increase in value over time. At the beginning of 2022, Rolex raised the price of their timepieces by more than 4.2%, and genuine Rolexes have become harder and harder to find over the past few years. Their demand is seriously outpacing their supply by a really wide margin. As a result, resellers can benefit significantly from the demand and supply imbalance by charging really high prices. As I mentioned, at the start of 2022, Rolex raised the cost of its goods, and their online store serves as great evidence for this. To sum it up, prices for the timepieces in the classic watches series have slightly increased, though other watches saw an even bigger increase. For example, the price of the Oyster Perpetual increased by 4.2% from £4,470 at the end of 2021 to a stunning £4,660 at the beginning of 2022. At the same time, the cost of the Submariner increased, going from £6,136 at the end of 2021 to £6,780 in 2022. This is a price hike of 10.5%, and adding on to that, Rolex also doesn't intend to boost their production capacity in the coming years. This is a very strong indicator that the supply and demand gap will continue to widen, driving up the prices of these timepieces. A brand's popularity, like Rolex for example, will grow over time to the point that customers are willing to pay any fee the company demands. They know that no matter what, some customers will do absolutely anything to obtain a Rolex. In response, Rolex prefer to increase the prices of their watches rather than increasing their production or creating a shortage. So by buying one of their watches, your money could possibly triple within 5 years. Just imagine that. Number 6. Bonds and mutual funds. For many investors, investing in bonds through a bond fund is more cost-effective than purchasing individual securities. Bond mutual funds are very similar to stock mutual funds in the sense that you pool your money with other investors' money, and a professional will then make investment from that pool of money based on what they believe has the best chances of rising in value. Some bond funds invest in short and long-term bonds from various issuers, including the USA government, government agencies, corporations, and other more specialized securities to replicate the general market. Additional bond funds such as short-term treasury or corporate high-yield funds concentrate on a smaller portion of the bond market. Bonds have never truly been a hot investment like stocks or cryptocurrency, but looking ahead to 2023, there's a compelling argument for investing in this underwhelming market sector. Bonds are cheap, they're expected to pay ever lower interest, and yes, their battered prices will probably rise again. Number 7. Land. The idea of investing in and purchasing land is not always adequately understood. The majority of individuals are quite unaware of how the land purchase procedure actually works. It should go without saying that buying land is an innovative strategic choice that investors must make to diversify their holdings. Surprisingly though, many investors turn their noses up at purchasing land. But despite that, is purchasing land a wise financial decision in 2022? Absolutely yes. If you purchase land now and plan to sell it in 2023 or beyond, you could profit significantly. The most straightforward way to gain money is to sell your land. And since with land you can pretty much immediately recoup your investment, it's almost always profitable. However, the highest and best use of your land must always be considered when determining the value of your property. Landowners must also make significant improvements to their property to raise its value and sell it for a fair price. And by the way, compared to other real estate holdings, lands are much less expensive and need much less upkeep. Utility costs, mortgage payments, roof repairs, and replacements are not your responsibility. Another benefit is that the landowner doesn't bear the insurance cost. Since property taxes are mostly the least expensive out of all, your property won't require unforeseen expenses and will discreetly appreciate. Well, with all that being said, now you know where exactly to put your money. So which of these sectors will you invest in the coming months and why? Do be sure to let us know down below in the comments. Don't forget to leave a like, subscribe, and turn on notifications so that you never miss an upload. Remember, this is where we discuss the famous, rich, and powerful. Thank you very much for watching, and we'll see you next time.